To begin our discussion on lease disclosure, let's look at what the standard has to say about presentation on our financial statements. In the Presentation Matters for Lessees, ASC 842-20, 45, 1, and 2 state that either on the Statement of Financial Position or in the notes, we must present our finance and operating lease right-of-use assets separately, and our finance and operating lease liabilities separately from each other and from other liabilities. And our right-of-use assets and lease liabilities are subject to the same considerations as any other non-financial asset and financial liability when it comes to classifying them as current and non-current. We've already been separating our liability into current and non-current balances throughout this series. For finance leases specifically, you will sometimes see companies combine the finance lease liability with other long-term debt. But the key point is that somewhere in the financial statements, the user needs to be able to see the balance of both finance and operating right-of-use assets and lease liabilities. Next, paragraph 842-20-45-3 states that on the balance sheet, a lessee is prohibited from presenting finance lease right-of-use assets in the same line item as operating lease right-of-use assets, and finance lease liabilities in the same line item as operating lease liabilities. So for example, if we choose to combine our finance lease liabilities with long-term debt, we would be prohibited from also including operating lease liabilities in that one line item. Then 842-20-45-4 focuses on our P&L, the Statement of Comprehensive Income. It states that for finance leases, interest expense and amortization are not required to be presented separately, and instead should be presented in a manner consistent with how the entity presents other interest expense and depreciation or amortization of similar assets. Additionally, for operating leases, lease expense is included in the lessee's income from continuing operations. And finally, for the statement of cash flows, paragraph 842-20-45-5 states that a lessee shall classify repayments of the principal portion of finance lease liabilities within financing activities, classify interest arising from finance leases in accordance with the general guidance for interest paid in Topic 230 on cash flows, which would typically require interest on a finance lease to be classified as an operating activity, classify payments arising from operating leases within operating activities, except to the extent those payments represent costs to bring another asset to the condition and location necessary for its intended use, which should be classified within investing activities, and finally, classify variable lease payments and short-term lease payments within operating activities. So that covers lease presentation across the balance sheet, income statement, and statement of cash flows. ASC 842 is fairly prescriptive here, and the key takeaway is that information on our finance and operating leases must remain clearly distinguishable throughout the financial statements. Now let's quickly turn to a public company example. Here I have the most recent 10K for American Airlines, which leases a large number of their planes along with airport space and office space. If we first look at their balance sheet, you can see they separate their operating lease right-of-use assets, but not their finance lease right-of-use assets. So they must present those elsewhere in the notes to the financial statements. Then they separate their lease liabilities into current and long-term, and combine their long-term debt and finance leases into one line item. But consistent with the standard, they separately present their operating lease liabilities, because ASC 842 prohibits combining finance and operating lease liabilities into a single line item. Then in their lease footnote, which is note 5 of their financial statements, they satisfy all other presentation requirements of ASC 842. You can see they include a supplemental balance sheet information table that presents their right-of-use assets and lease liability information, segregated between operating and finance leases. And as you can also see, they include a lot of additional information in this footnote. And there would be further detail in their lease accounting policy notes. All of this is required under ASC 842. Including both the qualitative and quantitative details about their leases. So in the next episode, we'll look at the qualitative disclosure requirements under ASC 842, and then we'll cover the quantitative disclosures after that.